Greetings everyone, JJ here from SchoolOfTrade.com. Today was March 16th, 2010. Happy Fed Day to you all. Hope you guys had a good time in the room this morning. I know we did as well. Learned a lot, took a couple trades, made some money. Before we talk about those trades today, I want to tell you guys more about the 3 important links. If you're watching this video on the YouTube page or anything else besides the YouTube page, just double click on that video, guys. That will take you right to the YouTube page. And of course, the 3 important links: 12-month track record, 3-week trial, and of course our blog. We recently posted another video series, guys, on trade management on the blog, so make sure you guys check that out. We took 4 trades this morning: 9 o'clock, 9:30, 10 o'clock on gold and crude. Now today was Fed Day, so we knew what to expect, right? We'll talk more about that in a second, but as you guys can see, pretty much a break-even day today. 60 bucks in, 6 ticks over. Gave back a little bit at 9 o'clock, made it back at 10 o'clock. Well, we'll talk more about it here in a second. What was the most important thing that happened today? Today was Fed Day, right? FOMC Day. That's when the Federal Open Market Committee, right? That's where they release their, of course, decisions on monetary policy here in the U.S. Most importantly, interest rates. So how do we trade Fed Day? What do we expect to see on Fed Day? We expect to see high volume at the open. We expected to see volume slowing down 10:30, 10:45, 11 a.m. We were, of course, right, cautious about seeing unpredictable, sometimes very illiquid price action towards the close of the morning because people are going to start sitting on their hands in preparation for the 2:15 news announcement this afternoon. Now, guys, what I always tell people is on days like this morning, give the market a chance to give us some feedback, right? And that feedback we'll then use to make better educated decisions throughout the rest of the morning. So we usually try to get into a couple trades right off the bat, right? Kind of see how the market's moving for us here. But this morning, I want to go over a couple things we saw in the markets that really stood out for us here today. Now, to begin with, here on the crude, I wanted to talk more about momentum because momentum has been kind of a thorn in our sides all week here. Now, first, let's start up top here, guys, upper right-hand corner. Notice how we have short-term trend up. Here's my high of day here at 81.99, my high of day. So immediately I'm thinking 2 steps short, right, for reversal. We mark up our swing low there, 81.80 for the reversal here. Okay, that's called the 2-step pattern, right, the 2-step. Well, the 2 steps short, that trend reversal pattern, that pattern was setting up here. And of course, normally when we see such a big jump to the upside like this, we're going to see price, well, the faster they rise, the faster they fall. Now, this is something we're seeing all week this week, and it started late last week, and that was momentum really told the story here. And this is something you guys can use. When we see trade patterns setting up like this, guys, right, where, of course, it required price to, of course, pull back off that high. Follow me down here to momentum. And now look, momentum is curling up from the bottom. Now, guys, if I'm taking a short trade, I want momentum pointing down from the top, right? Not the way it looks right now. Okay, so obviously that's the wrong direction. Now, we look at the slower version of this momentum indicator, right? So the fast version of this is curling up from the bottom. It's oversold, and oversold momentum when we're just trying to get into that trade up top here is definitely not a good thing to see. Same thing happens over here on the slower time frame momentum, right? You see momentum indicator there also curled up from the bottom. Again, oversold. Now follow me to the left, slowing of the pace of a tape, and then right above it, all these big sellers here on the tape. So if you're looking at this pattern, right, without the momentum indicator, right? If I was looking at the pattern without momentum indicator, I would have said we have to take this trade, right? Short-term trend up, drops below my swing low, off the high of day, right? That's a picture-perfect 2-step short. In fact, we look over at the time and sales window and look at all these big sellers. All right, but now here's what, right, and here's the point of the story here, guys. Red pace of a tape, all those big sellers, why would momentum be oversold? Right? It's because there's not enough conviction to the upside or the downside. All right? Not enough conviction, not enough sellers in the market are convinced to go short. At the same time, not enough buyers are convinced to go long, or else it will be blowing through that high of day. Guys, when you see momentum like that, right, big sellers in the tape, price action slows down the pace of the tape, and then we see momentum overbought or oversold, we know we're in a situation we got to be careful. All right, now keep moving. Over to the dollar this morning. Now follow me to the left side of the screen here, right, all the way to the left side here, and you'll see we have these double bottoms here. Now, at 8 o'clock this morning, we, of course, identified this double bottom here, and we marked it up at 80 even on our charts at 8 o'clock. Now, fast forward, you guys can see here at 11 a.m., now we see crude oil jumping to the upside, testing its high of day, right? At the extremes of crude, we're also now trading at the extremes of the dollar, right? It's a negative correlation, so of course we have to be careful. We see the dollar at its extremes, the crude at its extremes, and what do you think we're looking for? We're looking for a two-step pattern short, right? Reversing off that high of day. Now notice where right here, right, we got that break below it, but then it reverses and goes right back up with the current short-term trend. Now, of course, in a normal environment, we expect price to go with the short-term trend. The point, though, I'm trying to make here is the dollar trading at that double bottom, and then look at how choppy price gets here, right, at its extremes. It tries once, twice, three times to break the highs. It tries once, twice, three times to break the lows. It then tries once, twice, right, once, twice. It's chopping around here, guys, up at these highs, right? What's the lesson we learned here? We learned prep for the day ahead. Look at the dollar. Where's my double bottoms, right? If you knew where those double bottoms were, big round numbers, important levels in the dollar, we expect the dollar to get very choppy. Guess what? You're also going to see the dollar, right, correlation with gold, crude, euro, pound, Russell, S&P, everything. So we knew to stay away from this area, and I'm glad we did because you can see very difficult price action to trade with. And then finally here, guys, on the gold, we had a member this morning ask, Joe, why is this price action doing this? Right? Look at this price action here. We've got these periods of sideways chop, and then we have periods where we just run right through, right? Run to the upside. Right, guys, this, when you see this on your charts, guys, this is a definite heads up. We either have algorithmic traders in the market, or what I think happened was that the volume here was so low, right, that only the black box traders were pushing this thing around this morning, right, 9 o'clock this morning. Guys, when you see markets that look like this and then come down bottom here, look at momentum, very choppy, right, guys, this is something you want to stay away from, guys. We saw this morning before the open at 9:30, and it really told us right away, be careful on gold this morning. Right? So be careful, guys. Ultimately, black box traders are running that market. Right? Pretty simple stuff. And then last but not least, this is the slower time frame on gold. This really gives you a much better kind of illustration here. Now, as you can see, there are lots of trend lines here. Right? But the big ones I want to keep an eye on here are right here, right there, right, and right here. Okay, now, notice how, right, we have these spaces in between where price will go sideways, jump up, go sideways, jump up, right? Well, if you look closely, guys, right, these trend lines that we took about 15 minutes before we started trading, these trend lines we placed ahead of time. And guys, boy, those trend lines sure, right, they sure held pretty well there. What's the lesson we learned, though? Whenever we see a market that gets chopped up below the trend line, right, almost like the trend line will kind of hold it, and then it breaks that trend line and goes right up to the next trend line, right? And then holds. All right, guys, so that's kind of the idea behind this, is that it's going sideways, breaks that trend line, but really on no good move, it just kind of gets sucked up to the next trend line, right? Chops around there, breaks that trend line, and then gets sucked up to the next one, right? That's going to tell us, again, that low volume environment, because really, there's nobody really of any decisiveness in the market this morning.